All right. Good morning, everyone. It's 11 a.m., so we're going to get started. I'd like to welcome you to a webinar where we're going to be covering a hot topic, which is an investment opportunity alongside Legacy Capital Partners. The purpose for this webinar is to sort of cover an investment opportunity located in North Sacramento, as well as address any sort of questions or concerns you may have regarding the investment opportunity. It'll also be an opportunity for you to get to know a little bit more about Legacy Capital Partners in the process. So without further ado, I'd like to kick off the webinar with an introduction of myself as well as my business partner, Cory Hill. My name is Jason McBride. I am overseeing investor relations on behalf of Legacy Capital Partners, located in Lafayette, California. And really glad to be here because I think this is an amazing opportunity. And really quickly, I just wanted to share a little bit more about myself. My background is based in the VC as well as partnership space. Have been living in Silicon Valley for the past 30 plus years, and so partnering with my colleague Cory Hill, who will introduce himself shortly. Cory, if you want to go ahead and introduce yourself, and then we can go into the deal points as well as other parts of the webinar.
Sure. Thanks so much, Jason. Yeah, so my name's Cory Hill, and I live here in Northern California. Been here all my life, and which makes investing in Sacramento so great. I've been married for 18 years almost, and have two children. Graduated from UC Davis in economics, and after that had various careers in accounting and also in administrations with UC Berkeley. And I came into after being in those various careers, I thought about I had a financial issue, and I thought about, hey, how can I solve a financial issue that I have in terms of increasing my wealth, and I saw that the track that my wife were on and I that we were on a decent track, but we needed to have more of a formalized plan in order to have the type of lifestyle that we wanted in the future. And become a real estate investor was that for me. And thus far, it's been amazing. It's really helped us financially. And so that's when, I partnered together with Jason and we formed Legacy Capital Partners. And, and what you find when you do research about individuals who are looking to grow their wealth, not only are you finding your own opportunities, but you're finding opportunities for other people. And I think that this opportunity is definitely our way of giving an opportunity to our close circle and also to the general public, wherein they can have an investment option that is not readily available, and we're really proud of that. Jason, did you want to get into now show them a little bit about the property we're talking about?
Absolutely, yeah. So what we'll do is we'll cut to a video just so everyone, all the viewers, can sort of see the property. So what you're getting ready to see is sort of aerial footage for the property located in North Sacramento. So we're going to cut to a video, and then we're going to get into more details regarding the property. Here's the video. All right. So essentially, there you have it. That's the property in a nutshell. But I think, sort of the devil's in the detail. So Cory, you want to talk a little bit about the property highlights, the location, the address, a little bit about the square footage, et cetera?
Absolutely, absolutely, Jason. When you're investing in real estate, the key is to buy right, right? You hear that over and over again,
Correct.
and the way you quantify that is by how much you're buying it, typically under market value. Okay, and we were really excited about this deal because we were able to secure it eventually at about 32% below market. Now, let's take a step back and talk about how we went about doing that. I'm in charge of acquisitions, Legacy Capital, and that what that involves is it involves a lot of work, and it involves contacting brokers, letting them know what type of deals you are looking for, also analyzing just lots and lots of deals. We acquired our last acquisition about 9 months ago, and we had a stabilization period of about 6 months for that deal. After that, we took I'd say about 2.5 months looking over literally hundreds of deals, specifically in Sacramento and some in the greater Sacramento area. And this was the one that really stuck out at us. Now, specifically to this deal, I was networking with a specific broker, the broker that's working on the deal with us right now. I was actually talking with him about another deal. And then while I was on the phone with him one day, he said, "Hey, I think I have something that I think will work out for you." And I was like, "Okay, let's check it out." But I had a feeling that it was going to be something good. And so he tells me about the deal and some of the unfortunate circumstances that took place for that deal to actually get to the eventual seller. But essentially, they were looking for an off-market sale. Okay, and another key is if you can get an off-market sale, typically you're going to be able to negotiate a good deal.
Good
So
point.
yeah, no, absolutely. They had a specific price that they wanted, but we also have a policy of not offering right at asking price. We feel like we've got to get a deal that not only is below market, but we don't want to offer right at asking price. So we offered below asking price, and we negotiated to a price of 965. And Jason and I were elated at that price based on comps in the area. That building could be sold next day for more than that, for a couple $100,000 more than that. So you're always doing well if you come into the deal with equity. One of the things that we really love about this property. It's located in North Sacramento, and this was kind of introduction for me into North Sacramento. But when you come off the freeway to check out the property, it's actually really nice. It's a working class community, and there's a lot of great things happening in the community. One thing specifically that we read about is that they're going to be paving many of the alleyways in the neighborhood, and we have an alleyway with that building that's attached that actually has not been paved by the city. So the city is going to be beautifying and paving many of those. So we may just acquire that benefit just from purchasing in that neighborhood. What else? It's got a stabilized tenant base. When we came in there, one of the things that we want is we get conventional financing. On this deal, we're getting conventional financing. And so one of the things that necessitates is that we're getting conventional, that we have a stabilized tenant base. And that just doesn't mean that there are individuals living in the units, because sometimes individuals are living in units, but they're not necessarily paying. But at this building, we were glad to find that when we looked at their financials over the first month, 3 months, and even through COVID, that these hardworking tenants have been able to keep up with their rent payments, and that was great. And then when we did our due diligence, we were on the ground and we were at the building. We were happy to see that individuals are taking good care of the building. We could tell that there were things around the edges that could be cleaned up. One of the things that we plan to do as it relates to the business plan is to renovate the laundry room, because that's something that's going to right away affect all the tenants. They're going to get a nice, cleaner laundry room. We're also going to do some landscaping, and there was also some kind of trash and things like that needs to be picked up. And because we already have a gardener, handyman, and other individuals in the area, it's going to be very easy for us to execute getting those individuals out there at a cost-effective rate to beautify that space for our tenants. After that, it's just going to be about taking care of immediate needs. There was a slight water issue underneath the foundation, and so we're going to have that taken care of. Um, and then that's basically it. Then it just goes into implementing the new property management that we had an initial meeting with that we were pretty impressed with, and we are going to move forward with them taking on that property. And that's basically it. We're going to take care of these tenants. We're going to be very tentative to their needs. One thing that sets us apart is that we're not going to be taking. Jason and I don't need to take funds out of this building like many other investment groups. They take the cash flow from this building and they use it for their personal income. We're not going to be doing that. So if we've got issues at the building, something needs to be repaired, something needs to happen to take care of tenant needs, we're going to be able to take from that cash flow and take care of the building.
Great point. Great point. So what I'll do is I'm going to pivot and sort of go over more of the sort of investment criteria, investment opportunity. And then after that, we will sort of open it up for Q&A. So with that in mind, I'm just going to pull up the returns for investment. And so what I'll start off with is sort of just an overview as to how someone could potentially invest in this property. So essentially what we have is a sort of a debt vehicle where a prospective investor could lend the funds and get a guaranteed return through this property. And a key distinction is that, when you look at what's available in the market, right, whether it's a savings account, a CD, S&P 500, you want to view that obviously in light of inflation, right? So when you look at all those different options, you put them into a pot and you sort of boil that up, what really comes to the top? And the answer is really nothing, right? Because when you really think about how real estate stacks up against other investment vehicles, it does significantly better, in particular when you're dealing with inflation. So one thing we're trying to do is not just stand behind the real estate transaction, but also give a healthy return. And this is what you see here in the return for investment. So we have, through those contributions, a guaranteed rate that sort of compound on an annual basis, starting at 7%, getting all the way to 10%. The key thing to call out is that essentially this is an opportunity for us to give an investor a guaranteed return within that 30-year period. And the reason why we have that highlighted is because the intent of a lot of the investors is to get a material return, but also get a decent exit within a timely manner, right? So instead of having it locked up for 7 years, the intent and the obligation on our side is to unlock that potential by year 3. So for example, hypothetically speaking, if you were to invest 25,000, 7% rate, again, compounded on an annual basis, year 1, year 2, then year 3, which would be at $30,626, that would be that return. And so the intent is to give that return within that 3-year period, but have the discretion or the right to continue down the path for the property if we need 7 years. While we don't anticipate on going the full 7, because it's for everyone's interest and everyone's advantage to exit at year 3, we have the right to do so. And the advantage for the investor is that whether they stay in for the shorter duration of 3 years or whether they're in for the long haul at year 7, it's a guaranteed return that's significantly better than anything you can possibly get in the market. So that's something I just want to call out, because typically, when you're looking at all these different investment opportunities, you really have to sort of do a compare and contrast. And I think that we have an awesome investment vehicle here for any prospective investors, in particular for anyone who may be a little bit apprehensive about the market at this time, and they're looking for something to help them diversify their portfolio, because this is something that should be one part of your portfolio that has other assets, right? So when you think about it, the opportunity here is great because you have a guaranteed return through real estate that'll help you really diversify your portfolio. And I think that's really what this amounts to: guaranteed return over a 3-year period, but the extended value could be up to 7 years. And so one of the questions that we get is that, okay, so who is the guarantor for this sort of investment opportunity, as well as questions like, what happens after year 7. And so we'll get into that more as we touch on the Q&A segment, but we have all of those issues covered. And so that's the purpose of this call, is to make all of the prospective investors feel very informed and educated, and feel good about making an investment decision should they decide to invest alongside Legacy Capital Partners. Cory, did I miss anything there? Anything you want to add there?
No, I think you covered it, Jason. I think that thus far you've been extremely successful in sharing these returns with individuals. I think we're already, 45% subscribed
That's right.
on our goal, and we could stop there, but I think that it's important as a organization that is seeking to increase the wealth of the organization, but also again provide those same opportunities to individuals outside of the partnership. So I'm excited about this. I'm excited about anybody that would like to partner with us, and it's going to be great.
That's awesome. No, I mean, I think you're spot on. I mean, I think this is a gem of an opportunity, which, by the way, for a lot of people who don't know, these opportunities don't come around. When Cory does his due diligence, and he didn't call this out, so I'll call out for him. He's doing an amazing job from start to finish, finding these opportunities. And these opportunities take time, right? You're talking over the duration of several months, because he's not going to deviate from the investment criteria. So when he's scoping and sourcing these deals, it's not like you take from a handful of opportunities that are out there. If it doesn't meet the investment criteria, the smell test, he passes. So Cory did that for several months before finding this opportunity, which, by the way, was off market, which is extremely hard to do. It's even harder to do in a state like California in light of the real estate. So when you have an awesome opportunity like this, it just doesn't come around all the time. With that said, I think, Cory touched on the salient deal points. I gave my best effort at sort of going over the return for the investment. And so what we can do now is pivot to Q&A. So if any of you out there who are watching would like to ask questions, keep them coming, throw them our way. I think you can do that whether it's through YouTube or through the chat channel through Restream. But it already seems like we have a couple of questions on deck. So what I'll do right now is at least bring up a couple that I know that are being asked right now and have been asked in the recent past. So the first one, I'll actually just direct this to Cory. Cory, you want to talk a little bit about, how are we able to back this? How are we able to give investors confidence that we'll be able to deliver on that return on that investment?
Sure, Jason. I think that giving back these returns are based on very basic principles of real estate investing. And those principles are based on, if you can, one, find a deal that's off market, undervalued, okay? So we're purchasing it with about 30% equity day one, right? And then what we're going to do is we're going to implement competent management wherein we're going to have good communication with tenants. We're going to provide benefits for tenants, but we're also going to be increasing rents. The city of Sacramento allows a 9% rent increase on their multifamily buildings, and we're going to be trying to get as close to that as possible. And we will again also be providing additional benefits to those tenants. We'll also be doing physical improvements. So we also plan to paint the building, and I also discussed that we will be redoing the laundry room. Another thing we plan to do is, right now the vacancy rate in Sacramento is extremely low, meaning that people don't often move. I think last time I checked it was about 1.9%, extremely low. But on the odd chance that someone does happen to move out, we're going to have reserves, and those reserves are going to be used to flip out that unit and bring it up to market, meaning, potentially doing new floors. We're going to do an assessment of the actual structure, maybe do new floors, maybe do new countertops, paint it up, make it look good. And at that point, again, when we bring in a new tenant, again, we'll be able to increase those rents. And what that does is, on a multifamily property, in terms of its valuation, and I mean, on a side conversation, we can really get into the geeky calculations that I love to get into. But essentially, as you increase the rent or the revenue on that building, it exponentially increases the value of that property. Okay. So now when Jason was talking about a 3-year exit, so we have two potential exit strategies. The first is, and if anyone has a home, typically these are the exit strategies that you have. They're to refinance or to sell. So at the 3-year mark, that's when we'd like to refinance. And we are totally confident that just based on the increase in revenues alone and the physical improvements,
Yep.
we'll be able to increase the value of this property. And that doesn't even take into consideration the fact that in California, we're an appreciation state. Now, but we're not going to, that is just the icing on the cake, but we're still confident in our business plan.
That's awesome feedback. So I was going to sort of ask this question because I know this is coming up. What does it mean to be a guarantor? Like, could you sort of define that? What is a guarantor, and who are the guarantors for this opportunity?
Sure. I think that question is, it may sound like a mouthful, but it's pretty simple. Legacy Capital Partners are the guarantors. That means that we take on the largest risk, and in multifamily, the largest risk is default risk, meaning you have the risk of if you can't pay the mortgage, then that's going to affect you on your credit and other things. So Legacy Capital Partners, meaning, specifically our group, Jason and I, and, other partners that we may have, they are the guarantors on the loan.
Next question. I'll rephrase this question. Is this Legacy's first rodeo in multifamily investing? I mean, what's the track record to date?
Good question. Well, so I think that, like I mentioned earlier, this is our second acquisition in 9 months. And, for other groups, that might not be a lot of deals, but for us, I feel like that's pretty good movement. Our first deal, you mind if I touch on the first deal just a little bit, Jason?
Absolutely. Yeah.
Yeah, sure.
Yeah.
So our first deal, just to kind of show as a track record, first of all, just overall, the deal is performing, the building is performing in an amazing way, meaning that not only are tenant needs being taken care of at a much higher level, but the building's also more profitable. It's cleaner, communication is much better. And so that's the same model that we're going to use for the other property that we have at this property. Again, tenant communications, be tentative to their needs. We're going to increase the value of the property, not only based on the revenue that we're going to generate, but also by the physical beauty of the building.
Awesome. Yeah, that's great feedback. I am now going to see if there are any additional questions. I think we got a little bit more time. I think we're approaching the 24-minute mark.
Sure.
Just want to be cognizant of time. Here's a question that I think I know a lot of prospective investors would appreciate. Assuming I invest, what communication will I receive over the life of my investment? You talked a little bit about communication. Could you sort of dive into a little bit deeper? What would that look like?
Sure. So communication, I believe in communicating fundamentally, as things are really, if you have really important things that need to be communicated, they'll be communicated. But on a regular basis, investors can anticipate having a correspondence with us, meaning either a call, a PDF document with an update, an email, or maybe even a video. We kind of like the idea of also doing video updates. I'd say at least once a quarter. Okay, once a quarter. But you're always welcome to schedule a meeting with Jason or I and discuss what's going on with the deal. Okay. But thankfully, one of the great things about multifamily real estate is that oftentimes there aren't a lot of updates. Things are just either, once you get through hurdles and people are happy, people are taken care of, there isn't a lot to deal with. So you're just kind of going along and allowing time to take place so that the business plan can be put in place. We get into a position when we can take advantage of one of our exit strategies. And then at that point, before that, we'll contact you and say, hey, we're looking to, exit or do that refinance, and we'll be paying you back soon. and we can discuss what that'll look like, so you're not, unprepared when you get those funds back.
Makes a lot of sense. Makes a lot of sense. And here's the question. I mean, I think this is not one that we just received, but it's one that gets brought up. I know the answer to this one, but I know that it gets brought up a lot. So
Sure.
maybe you can share your feedback. Why Sacramento?
Mhm. Mhm.
What is appealing about Sacramento? I don't want to ask a leading question, so I just want to keep it up. Why Sacramento?
Sure. No, absolutely. I think that, that's a good question. And I think the answer is that Sacramento's not great for all real estate investors, but Sacramento was great for me because I consider that my home turf. Sacramento is about, 20, 25 minutes away from where I grew up. As a child, I would spend time going there on occasion. And even as I went to college, I went to UC Davis, spent a lot of time there. So it's home turf for me. When I'm there, I'm very comfortable. I know the people. I know the weather, and many of the individuals that are there are just, we just click. Now, in terms of the financials that make it important that we invest in Sacramento, the number one factor that I like is the Bay Area to Sacramento uh, inflow that has for the most of my life has happened, and we anticipate will continue to happen, meaning individuals who are priced out or would like to have lower housing costs, they often move to Sacramento. It's essentially the other larger metropolitan area in Northern California. So if you want to stay in Northern California and you want to have access to sporting teams, nightlife, a very diversified job market, the Bay Area and Sacramento are basically it. Okay. And, the numbers bear that out. And you'll find that if you looked up Sacramento, it's one of the top markets in the country to invest. It just is. It's one of the top markets based on many different metrics. And we're going to continue to invest there. We're going to create a little hub there until we find another market.
No, that's spot on. I think I'll back you up on that one. I mean, I think growing up in the Bay Area from Fairfield, California, and
Mhm.
spending a lot of time in Sacramento, you can just see um, it sort of blossom before your eyes, right? Like every
Mhm.
5 years, it just
Absolutely.
seems like it's starting to build out this bigger sort of ecosystem and infrastructure, which is
Yeah.
going to be key to its development in the future. And so I think that's why you're seeing a lot more investment in Sacramento. You're seeing rents go up. You're
Mhm.
seeing just a lot of people start to give Sacramento more love and the attention that it probably is long overdue,
Sure.
because it's one of just those pillars within California that continues to exceed expectations. So
Mhm.
I definitely think for that reason, and the reasons you stated, we definitely have a gem here. Time right now is almost 29 minutes in. So I think what we'll do is we'll probably close at this point. We want to be
Sure.
mindful and respectful of time. But before I close, just want to thank everybody for tuning in today. If you have any questions, you can reach out to us, and I'm going to put the information right now on the screen. So if you have any questions, please reach out. You can reach me on my cell, 925-967-8448. So if you have any questions or concerns regarding the opportunity, or if you just want to chat about, real estate in general, multifamily, et cetera, give us a call. We're very accessible. You can reach us anytime. Email address info@legacycapitalca.com. And then also feel free to check out our website. We are going to be updating our website with investment opportunities, including the one that you just had a chance to view today. So thank you very much for your time, and we look forward to hearing from you. Cheers. Bye.